Hello folks, my name is Liang. I'm delighted to share something today on the topic of the US-China trade war inflection and reflection. After China joined the WTO in 2001, bilateral trade between China and the United States snowballed. The United States and China have become the most crucial trade partners. Chinese economic aggregate has rapidly risen to become the world's second largest economy, and its economic influence is also rapidly increasing, such as Belt and Road Initiative, Asian Infrastructure Investment Bank, and Made in China 2025. Besides, China has trade surplus between China and US trade for a long period, and the rigid exchange rate policy. These factors considered considerable challenge to U.S. economy and geopolitical dominance. So American President Trump ordered new tariffs on the goods imported from China to make the American great again. The following timeline is review of China and the U.S. trade war. In June 2013, the American Department of Commerce launched a 232 investigation to investigate whether Chinese steel imports threaten U.S. national security. On March 22nd, 2018, U.S. President Donald Trump commanded the American Department of Commerce to impose additional tariffs on more than 1,300 varieties of goods imported from China. Then the Chinese Ministry of Commerce adopted similar countermeasures about American merchandise immediately. Chinese Ministry of Commerce imposed additional tariffs on 128 kinds of products imported from the United States on April 2nd, 2018. In May 2018, China and the United States temporarily reached a consensus on the trade war suspension and issued a joint statement seeking reconciliation. However, on July 6, 2018, the United States imposed an additional 25% tariff on Chinese export worth 34 US billion. The Chinese Ministry of Commerce adopted a similar countermeasure on the same day. On December 1st, 2018, China and the United States held a 19-day business negotiation at the G20 Buenos Aires Summit. Nonetheless, in May 2019, China and the United States expanded to expose the scale of additional tariffs. On June 29, 2019, China and the United States agreed to restart trade negotiations at the G20 Osaka Summit. On August 1st, 2019, the China-US trade war continued to escalate. On January 16, 2020, China and the United States eventually signed the first phase of trade agreement. The trade war harmed the United States and the Chinese economies. Because it is usually a zero-sum game in a short term, the negative impact of trade war on the financial system is mainly reflected in two aspects: systematic risk in the stock market and abnormal fluctuation in exchange rate. The turbulence in American stock market since trade tension has weakened business confidence. The Dow Jones Index average fell nearly 600 points on December 4th, 2018. As of December 2018, the Dow Jones Index still fell more than 10%, and the Standard & Poor's 500 Index fell more than 6% during trade war period. As trade tension between China and the United States intensified, the Dow Jones Index fell by 800 points on August 14, 2019. The Dow Jones Index fell 623 points on August 23, 2019. Since Trump informally ordered the U.S. company to look for alternative to their operations in China immediately, the United States and China announced a preliminary agreement on trade war on December 13, 2019, which marked the suspension of the trade war escalation. Hence, the United stock market rose a record high at the end of 2019. The Dow Jones Industrial Average rose by 22%, and the Standard & Poor's 500 has increased by more than 28.5% in 2019. The turbulence in Chinese stock market, because investors worry that China may suffer significant losses in trade war. This and certain psychological factors has infected sentiment of stock market. In 2018, the Chinese stock market experienced the worst year in a decade. The Hang Seng Index and the Shanghai Composite Index falling by 13% and 25% individually. As of end of 2018, the stock in Shenzhen Stock Exchange averagely dropped by 13%. Shanghai Exchange dropped by 20%. The Hong Kong Exchange fell by 10%. The intervention in the Chinese exchange rate. When the trade supplies changed, the RMB faced devaluation pressure. Since September 2018, the Chinese government has continuously devalued RMB against the US dollar. The RMB depreciation relative to the US dollar has reduced the impact of additional tariff on China's economy. Besides, the trade war between China and the United States leads to the capital outflow in China. The rapid outflow of capital has also put tremendous pressure on RMB devaluation. As of October 2018, the RMB has depreciated more than 7% against the US dollar, and at the same time, Chinese total reserve assets decreased by 938.61 US billion. Therefore, stock market is shocked, and abnormal fluctuation in exchange rate were the two main risks between US and the Chinese financial system. By studying Week 1 financial market principle, I understand the role and the importance of the financial system, the function and the direct and indirect financial market, the risks faced by financial institutions, and the risk management. In Week 2 of the RBA and the interest rate, I studied how the Reserve Bank of Australia measures the money supply and how the Reserve Bank of Australia affect interest rate in economic activities. RBA's policies are transmitted through the economy and affect economic activities. Through studying Week 5 equity market, I realized type of equities, performance shares, ordinary shares, and convertible performance shares, dividend, and voting range. Through the learning of above three modules, this knowledge points have me now the US-China trade war lead to increasing systematic risk in both financial markets. In conclusion, so as to make America great again and eliminate the trade deficit with China, the United States took initiative to launch the trade war against China. However, the trade war has harmed the United States and the Chinese financial systems. The trade war has increased the systematic risk between China and the US stock market and abnormal fluctuation in exchange rate. The study of 6 modules in financial market have me develop the meaningful answer in this assignment, especially about the Week 1 topic, the financial market principle, Week 2 topic, RBA and the interest rate, Week 5 topic, equity market. Okay, this is my reference. Thank you for your listening. Have a good day.